Oh, good morning, everyone. Welcome to CSIS. My name is Matthew Goodman. I hold the Simon Chair in Political Economy and work on Asian economic issues in particular. Delighted to be here to host this event on export financing in an increasingly competitive world, featuring the acting chairman and president of the Export-Import Bank of the United States, C.J. Hall, who I'll introduce in a minute. But first, let me welcome all of you. Thank you for coming. I know it's not the most wonderful day outside, so we really appreciate your coming out. Also, thanks to our online viewers for joining. I assume there are some people who maybe had intended to come who are watching, and we always have a good and growing audience online, so welcome to you as well. A couple of administrative announcements. First, if you have any phone, well, I assume everyone has a phone that makes noise, please set it to stun or otherwise silence it. And then we don't expect any sort of incident, but if we had any sort of security incident, then basically I'm your security officer, and just follow me. We have an emergency exit down here in the back, or we can go down the front depending on what the situation is. And with that, let me just set the scene here by saying that the EXIM Bank was founded in 1934 at the peak of in the depths of the trough of the recession, of the Depression, to help promote U.S. exports and imports as part of the recovery. Interestingly, I found a really interesting historical fact in preparing for this. It's actually on the EXIM website. In 1938, they made a $22 million loan in support of something called the Burma Road to the Republic of China. And this was a road apparently linking Kunming with British-controlled Burma. And it was in support of, I think, Ford and Chrysler trucks and fuel, in support of a road that was being built, which was ultimately designed to help the British and Chinese work together against the occupying forces of the time. And I thought that was interesting on a lot of levels, but in particular because of the story that you see today with infrastructure big infrastructure push across the Eurasian landmass, and a lot of that being led by the People's Republic of China. Life goes on. I think that to me, this is why this conversation today is important, because China, for example, and China's not the only one playing this great game in Eurasia, Japan, Turkey, India, a lot of other players in this game, but China's Export-Import Bank has a balance sheet of about nearly $500 billion, and that's just one of China's policy banks, and not to mention other ventures like the AIB and so forth that it's supporting. Whereas the U.S. Export-Import Bank, on its balance sheet anyway, has about $30 billion, $30 billion of exposure. And so by comparison is a lot smaller. But in my view, still very important. It's a controversial agency. In 2015, it was actually shut down for 5 months because of a failure to reauthorize its basic constitution, and it's considered to be, by some critics, a form of corporate welfare and distortion of the market. But as supporters point out, it also helps to, EXIM through its lending, helps to offset some of the risks that are real in parts of the world where otherwise companies may not be willing to venture. And again, as I mentioned, everybody else is playing this game, and if we don't have some sort of tool in our toolkit to respond, then I think we're going to find it very hard to compete in this very important push. In particular, this infrastructure push across Eurasia, although there are many other places where EXIM operates. In my view, EXIM is a small but important part of the economic statecraft toolkit of the United States. And economic statecraft, as some of you know, is something that in our program in the Simon Chair we follow very closely. So I'm really interested in what Chairman Hall has to say. I don't want to make it too easy for him in advertising what they do, so I'll let him come up here and do that. So please join me in welcoming Acting Chairman Hall to this podium. Thanks. Actually, I'm sorry, come on up, and let me just say I'm totally remiss in not telling you that he has been acting chairman since January of this year. He's a former, he ran an environmental biodiversity-focused company focused in Africa, working on biodiversity issues and food security. He also worked at JP Morgan, was a foreign service officer, a naval officer, so he has a very distinguished and interesting, diverse background. I apologize for not having done that at the beginning.
No,
Chairman Hall,
thank you.
please.
No, thank you very much. Thank you, Matt. I guess my background reflects a certain lack of attention span, since I do a lot of different things. But anyway, thank you very much, Matt. Thank you to CSIS and to Scott as well for asking me to come today. I'm very honored to be here at this distinguished institution to speak this morning, and thank you to all of you who have come either in person or online. I've been asked to speak today on export financing in an increasingly competitive world, but before I get into that, I think I should point out that my presence here today is not entirely a random event for two reasons. The first reason is that last Friday we issued our annual Competitiveness Report to Congress, which is a mandated report we send up to the Hill every year. It's produced by our Office of Policy Analysis and International Relations, of which some of our members are here today, and has in recent years actually become an eagerly awaited reference tool throughout the export credit agency world, not just here in the US, but quite a few other ECAs asked for it repeatedly. So that's one reason that I'm here today. The second reason, though, is that this week is the second anniversary of a unique event for EXIM Bank, that is an extended hiatus in our ability to fully service the financing needs of US exporters. And Matt referred to this, the events of 2015. We can talk about that a little bit more in the Q&A if you'd like to, but it is a first for us that we have been reduced in our ability either for that 5-month period completely, or since then, due to a lack of quorum on our board of directors, to fully perform our mission. So that's the second reason that my presence here today is not totally random. In any case, I've been asked to talk about official export finance. I thought I should take 1 minute anyway to talk a little bit about what it is actually that export credit agencies do, including EXIM Bank, because I know not all of you spend all of your time thinking about that like I do. So let's get into the history of ECAs in 30 seconds. As Matt mentioned, most ECAs were founded starting in the Depression. Certainly that was the case for US EXIM, founded in 1934. The one outlier to that is the UK Export Credit Agency, UK Export Finance, officially the Export Credit Guarantee Department of the UK Treasury, which was founded in 1919. But other than that, the whole concept of export credit agencies really began during the Great Depression. And initially, these agencies did things like the Burma Road, which were large one-off projects driven by the foreign policy mandates of their respective governments. By the 1960s, though, most of them had shifted to a more strategic emphasis of generalized export promotion for their economies, which led to, as you might imagine, a pretty unbridled situation of competition among the leading industrialized nations in terms of their export credit offerings, which was countered in 1978 by what's called the OECD arrangement among industrialized countries, OECD members, which was intended to level the playing field and stem this race to the bottom in terms of export credit financing. So by the 1990s, though, various issues in the international financial markets and increasing financial regulation led the ECAs to move also, in addition to the leveling the playing field role, into filling gaps, because increasingly we found that private sector financial institutions were unable to step in whenever exporters needed financial support. So the ECA started filling that role. More recently, most ECAs are moving back to a strategic export promotion strategy or role, which is, and I hasten to add, US EXIM is not doing that. We remain in the leveling the playing field and filling the gaps function. But many other export credit agencies are championing large exporters from their countries in ways that in some cases don't even relate directly to exports from that country. For example, in cases where Korea EXIM supports Samsung as a national champion, sometimes those exports are not even going out of Korea, but it's still considered to be in the national interest to support Samsung. So let's focus a little bit more on EXIM Bank itself. Our mission is to support American jobs. The proxy we use for that is US content. We have the highest content requirements of any of the ECAs, and that is because our mission really is based on supporting US employment and American jobs. We do that by mitigating cross-border risks through our loan guarantee, insurance, and direct lending programs. We are, in many cases, a last resort financing, which is the gap-filling role that I talked about a minute ago. And we counter the advantage of foreign ECA backing to level the playing field. We do all of this through two big sets of programs. We have a range of short-term insurance and working capital programs, which are aimed primarily at small and medium-sized enterprises. The short-term being up to 1 year, not beyond 1 year in tenor. Those are the majority of the transactions we do in any given year. Certainly they're most of what we do now, but even when we're operating normally, it's the majority of our transactions in terms of number of transactions. In terms of size of transactions and amount of financing support, however, most of what we do traditionally has been in our medium and long-term programs, where we provide facility for foreign buyers, and that's an important distinction to make. We do not, in our medium and long-term programs, support or provide financing for US exporters. So the General Electrics and Caterpillars and Boeings of the world do not owe EXIM Bank anything. We provide financing support for the foreign buyers of their products. And this is the area, typically these deals are over $10 million. That's the area where we have been hamstrung in the last 2 years. So let's go through a couple of facts and then I'll get into the meat of my presentation. EXIM Bank supplements the private sector. We don't displace it. 98% of the transactions that we do are done in partnership with private sector banks and insurance brokers. And even in those cases where occasionally we do a direct loan, we use private sector banks as facility agents. So that is a form of partnership there as well. We make financing available for buyers of American exports. I just made that point a minute ago. We fill gaps in the private sector at rates that reflect the market. So when we do direct loans, which is very rarely, we do it using commercial interest reference rates, which are governed by the OECD as well. So these are market-driven rates. We review all of our applications to ensure repayment. And we have in our charter a requirement for what's called reasonable assurance of repayment, which admittedly is a somewhat lower bar than the lending bar I had when I was at JP Morgan. But reasonable assurance of repayment is what we are tasked with applying to all of this. And we also review all transactions to make sure that there is support for US jobs embedded in them. And finally, we're self-financing. In the last 20 years, US EXIM has sent over $8 billion to the US Treasury. And that's over and above the operating expenses of the bank and the amounts that we are required to set aside as reserves for possible losses in those transactions. Over $8 billion in 20 years. So let's move into the next stage of my comments, which is why do I think that official export finance is important? Well, Matt referred to a set of policy tools available to governments. This is the old expenditure formula for GDP, and I'll date myself by admitting that when I first studied macroeconomics, the US national income accounts were focused on gross national product, not gross domestic product, but the concepts are the same, the data sets are a little bit different, but we've got personal consumption, business investment, government expenditure, and then that trade factor, exports minus imports, which together form the gross domestic product of any country. What are the policy tools that are available to governments to affect that outcome, the GDP outcome? The first general set of policy tools is monetary stimulus. That affects very directly consumer expenditure and business investment. We have fiscal stimulus, which of course directly affects government expenditure. And then we have export promotion, that broad set of activities, including the subset of official export finance, which affects that trade factor, the exports minus imports. So let's look at each of these three sets of policy tools independently and see where we are on them. This is a chart that will be familiar to everyone in the room. That's US interest rates, specifically the effective federal funds rate over the last 35 years. Long downward slope, that represents that long-term bond market, bull market, which has culminated in a relatively flat section there at the end, and in fact a little bit of an uptick. The Fed has started raising interest rates. We're all familiar with that. I think most people would say that the scope for continued decreases in interest rates is pretty limited. So that's the price of money. How about the quantity of money? This is the Fed balance sheet. That is a graph which reflects the various experiments in quantitative easing that the US Fed has engaged in over the past few years. It's taken the Fed balance sheet to unprecedented levels. No one has ever seen that kind of a balance sheet at the Fed before. And in fact, we all know that one of the big pastimes now of Fed watchers is anticipating the great unwind. We all know that the Fed is organizing itself to bring its balance sheet back down to normal levels, and the scope for additional increases or more quantitative easing is very limited as well. So between price of money and the quantity of money, what does that tell us about monetary stimulus going forward? It seems to me as though the scope for additional significant monetary stimulus is very restricted. What about fiscal stimulus? This is US national debt since 1980, homing in on $20 trillion. Now, we all know that in economics, nominal figures really aren't what's meaningful. What's meaningful are relative figures. So let's take a look at that chart, but as a percent of GDP. Again, homing in on 120% of US GDP. Now, I don't personally know any economists who don't think that that is getting into a region which is starting to put severe constraints on the ability of the US government to use fiscal stimulus to boost GDP. Now, what Congress does in the short term is anybody's guess, but it seems to me in the medium and long term, the scope for additional fiscal stimulus is also very restricted. So where does that leave us? It leaves us export promotion as the only set of policy tools available to government policymakers that is absolutely unconstrained. There are no constraints to what the government can do in export promotion. And that, as I mentioned before, includes that very large subset of export promotion policy tools, which is official export finance. So that's why I think export finance is important. So back to the GDP equation, we're going to focus on the X factor today, that export promotion factor, which is in the area of unconstrained options for governments. But this analysis begs the question, why do I think GDP is important? That's the next question, stepping back up a level. Well, most people would say GDP is important because it's both an indicator of and a determinant of national domestic prosperity. And clearly, domestic prosperity has to be a primary objective of any government. There's no question about that. But when I think about GDP, I think about it in a different way. My hypothesis is that the size and shape of a country's GDP determines the role of that country in the world economy. So let me say that again. The size and shape of a country's GDP determines the role of that country in the world economy. So what about the US GDP? Well, I would say that's a very positive trend line. There's a blip there, of course, for the Great Recession from 1980 to 2016. That's not bad. How does China plot on this? That goes part of the way to explaining what I've referred to in previous speeches as the China challenge. But it doesn't go all the way, because again, just like with national debt, it's not absolute numbers, nominal numbers that matter, it's really the relative numbers. So on purchasing power parity basis, how does China look? The size and shape of a country's GDP determines the role of that country in the world economy. That goes a lot farther toward explaining what I would call the China challenge to the United States and to all of the other industrialized countries in the world. So back to the X factor, that export promotion factor. I would say in getting into the discussion about the competitive picture in export promotion, there are two overarching factors, and our report that was released last Friday goes into it in greater detail, and if you'd like to dig into this further, we can certainly arrange to provide you with copies of the report, or it's also available on our website. The first overarching factor is China, that I just demonstrated from a GDP standpoint. I would call China the unconstrained factor in the world of exports, and I'll explain in the next few minutes why I say that. The second factor is Basel III, which is really only the most recent manifestation of a trend of international financial regulation, which I alluded to earlier, which, however, forms a certain constraint in certain environments for export finance. And I'll get into that in a few minutes as well. But first, China. What does the competitive export picture look like right now? We looked at GDP a moment ago. How about exports? Here are the exports of the three major industrialized nations since 1980. Again, pretty positive trend line, particularly for the US and Germany. We know that Japan has been struggling a bit since the early 1990s, but in all cases, a more pronounced blip for the Great Recession, no question about that. But generally a positive trend. What does China look like here? That goes even farther toward demonstrating what I would call the China challenge. And I would ask you to look not only at the right-hand side of the graph here, where China has done a lot more exports in recent years than the other three countries, but look at the left side as well. As recently as 1980, or really 2000, where was China in terms of exports? I would say pretty much nowhere compared to those other three countries. This is a recent phenomenon. This is not something that's been with us for a long time. This is something that's really a phenomenon of the last 15 years. China has come out of virtually nowhere in world exports to become the largest exporting economy on the globe. And that really goes a lot farther toward explaining what I call the China challenge. So what accounts for this comparative performance in exports? Well, I'm sure there are a very large range of factors that accounts for it, but I'm going to focus on export promotion because that's an area where I think we can draw some very stark differences between the US and China. And I think what I say about the US relates to a certain extent to some of the other countries that were up there as well. But it is a tale that is so starkly different between the two countries. I think you could call it a tale of two approaches. And in fact, focusing on official export finance as that subset of export promotion, there are significant quantitative and qualitative differences between the approach of China and the approach of the United States. And I want to make it clear here that I'm not saying that what China is doing here is wrong. I'm drawing the distinction between the two countries. So let's look at those quantitative differences first. First of all, simply number of agencies. The United States has US EXIM Bank. China has China EXIM, Sinosure, and the China Development Bank. Three agencies all engaged in the same kinds of activities that US EXIM Bank is engaged in. Now you could say, well, that's not too important. That's just the way the governments organize themselves. Number of agencies is not a meaningful statistic. So let's look at number of employees. EXIM Bank has about 420 people, civil servants, full-time government employees working at the bank. The three China agencies have 10,300 full-time government employees engaged in export finance. That's 25 times the number we have here in the US. Okay, you could also say, well, number of employees, that's also just how a government organizes itself. What about financing? In 2015, US EXIM Bank had $10.6 billion in export financing. The three China agencies did $576 billion that year. 54 times what US EXIM did. In 2016, which is reflected in the report we released last Friday, the numbers are even more stark. US EXIM did about $4 billion in 2016, and the three Chinese agencies did a little bit more than 576, call it 580, maybe 150 times what US EXIM did in 2016. That's a pretty stark quantitative difference, I would say. So what about the qualitative differences I talked about? Okay, first and foremost, we've alluded to this already, the United States has been a member of the OECD arrangement since 1978 when it was created. It remains committed to the OECD arrangement. Everything the US EXIM Bank does is under the OECD arrangement. China has never been a member of the OECD arrangement and has shown no interest in becoming a part of it. Also, we've been involved in negotiating with the Chinese government over the last few years in what's called the International Working Group on Official Export Credits. And we've learned a few things about their positions on things over that period of time. One of them is the United States has had a goal of maximum transparency in official export finance. The Chinese government has had a goal of minimum transparency. We're looking for broad rules coverage. China's looking for very limited rules coverage in governing official export credits. We're looking for a standardized rules-based system. China's looking for maximum flexibility. We're looking for detailed rules. China is looking for general principles to guide these activities. We have a policy of non-competition with banks wherever possible. China, of course, in a system of state capitalism, the whole concept of private sector and public sector is more muddied. But in any case, they have absolutely no problem with their export credit agencies competing with private sector banks. And to sum it all up, I would say over the years, the United States has used official export finance as a defensive tool, whereas China has used it as an offensive weapon. To be a bit blunt, I suppose, but that's the way I see it. So with these qualitative differences and the quantitative differences I mentioned before, you can see where this is going just by the scale of the chart. Here's the official export finance provided by Japan, Germany, and the United States from 2000 to 2015, just 16 years. In recent years, all three have been in declining mode. Where does China plot on this graph? And this is 2015 when they were doing 54 times what US EXIM Bank is doing in terms of finance, not the 150 times if I added 2016 onto it, which we will do eventually now that the report's out. But again, just as with the exporting graph, I would ask you not only to look at the right-hand side here in 2015, where China is relative to Japan, Germany, and the United States, but also the left-hand side, as recently as 2000. Where was China in official export finance? Nowhere. This is a recent phenomenon. Their three export credit agencies have been beefing up their ability to finance China exports to an extent that no one has ever seen in the export credit agency world before. So if there's one graphic I would ask you to take away in your mind's eye today from this talk, it's this one. In fact, it's so important I put it in twice. I want you to see that red line go up again. That's the message I'd like you to take away with you today. So, moving on, I've also been asked to talk a little bit about challenges from beyond China. So I'll do that as well. And to do that, I'll review what I'm calling the two overarching factors in the world of export finance. China, the unconstrained actor that we just spoke about, and Basel III, or the constraint. So why is Basel III a constraint on long-term export finance? It's a constraint because it affects the willingness and ability of the private sector financial system to engage in long-term export finance. This is a risk aversion issue. It's not a liquidity issue. And I'll get into that in a minute, but to analyze this, let's define something called the commercial bank strike zone for export finance. That is, what will, generally speaking, commercial banks be willing to do without an export credit agency guarantee on their lending? So to do that, I've looked at 2007 and 2015. just an 8-year period. Typically, in 2007, commercial banks would require a 25 to 75 basis point step up in their interest rate for a long-term export credit facility over and above what they would charge if they were being guaranteed by US EXIM Bank. In 2015, that had risen to 100 to 150 basis points, compensating for that increased risk aversion from the financial regulation system. Typical tenors back in 2007, banks would be willing to go out 15 or 20 years in certain cases without an EXIM Bank guarantee. In 2015, that was down to 7 to 8 years. Nothing more than that, really, generally speaking. Typical capacity per transaction without EXIM Bank, in 2007, it was $500 million. As recently as 2015, that's down to $200 million. And standardized risk appetite, back in 2007, the commercial banking system would be willing to go down to junk status in credit, single B, to do loans for long-term export finance. In 2015, that was investment grade only, low end of investment grade, triple B. And again, this is not a phenomenon that's driven by liquidity. The international financial markets are awash in liquidity today and have been for a few years. This is strictly risk aversion driven by regulation and if you will, the recollection of the financial damage that was done during the Great Recession. Other ECAs, how has this been reflected in terms of the behavior of other ECAs? Increasingly, other ECAs are turning to exports to drive GDP growth for the same reason that I discussed earlier, that the US set of policy tools are more attractive to, or should be more attractive to, government officials. They are adjusting to aggressive Chinese tactics, particularly with regard to large projects. So there's an increasing competitiveness and aggressiveness out there in the ECA world. They have increased direct lending in response to shrinking private sector options. An example of that is UKEF, the UK Export Credit Agency. Founded in 1919, it has only started direct lending in the last year. The first 35 years of US EXIM Bank's existence, from 1935 into the 60s, that's all we did was direct lending, before we decided that we needed to start cooperating more with the private sector and guaranteeing loans and offering insurance. But the British ECA has only recently started doing that. It's a real departure for them. And operating less and less within the OECD arrangement. 15 years ago, we could say that 90% of export credit finance was done within the OECD arrangement. Today, it's less than 30% and falling. So that calls into question, in my view, the relevance of the OECD arrangement when you've got 70+% of official export finance being done outside the arrangement. And the trend is down in terms of the arrangement. So specifically, we've got changes in form. France, UK, and Italy have totally restructured their export finance systems in recent years. China has boosted capitalization of its official financing mechanisms by $50 billion in the last couple of years. Japan has expanded its ECAs, that's GEXIM and NEXI, their mandate to include financing to developed countries rather, and significantly raised their risk appetite. The Nordics have added mission elements to their ECAs. And some of the countries, like Korea I mentioned earlier, and also Germany, has increased its capacity to fund untied exports, that is, exports that aren't necessarily coming from their own country, but rather in support of national corporate champions. What all this boils down to, in my view, is nothing less than an attack on the US supply chain. So I should point out that every Caterpillar earth mover, every General Electric locomotive, every Boeing jet, just to name the 3 big exporters we deal with, contains components from literally thousands of small and medium-sized and large companies in the supply chain. What we're seeing, and what we've seen particularly over the last 2 years as US EXIM Bank has been forced to operate with one hand tied behind its back, is an increasing tendency on the part of our competing industrialized nations to try to steal some of that supply chain. We have both Italy and the UK, in fact, talking about financing large exports from the US on the basis of supply chain acquisitions that are made in their countries. So what does that tell you? It tells you that those companies in those supply chains are here in the United States are suffering to an extent that isn't even apparent in the top line exports from the big exporting companies. According to the Financial Times, typically there are 8 supply chain jobs for every job in one of the major exporting companies. And for every $1 of exports, there's $1.50 that goes into those local communities in terms of economic benefit. So this is a real phenomenon, and it's something that we should all be aware of. So to wrap up, I need to be a little bit prescriptive here. I'll ask the question, what should the U.S. response be to these challenges in the international world of export finance? Before I answer that question, though, I'll say I know one thing for sure, and that is what the U.S. response should not be. And what the U.S. response should not be is that. That's U.S. EXIM Bank authorizations since 2000. And the last part of the graph, of course, reflects in the initial stages the resurgence of private sector financing that was available after the recovery from the Great Recession. But in the later part, it has to do with the last 2 years of the impairment of our ability to support U.S. exporters. So we would expect a certain amount of cyclicality in this graph as we feel, the need for us to fill gaps in international financing goes away as the private sector comes back to a certain extent from a financial crisis like we saw in the Great Recession, but certainly not that kind of pattern. And by the way, if on the scale on this scale of chart, if I'd wanted to show China, the red line would be somewhere way above the top floor of this building. So I wasn't able to do that. So what does this mean really in terms of numbers? The last 2 years, under the lapse in our authority and our lapse in board quorum, we went from supporting $27.5 billion of U.S. exports and 165,000 American jobs in 2014, which was the last year where we operated at full capacity for the entire year, to $8 billion in exports and 52,000 jobs in FY16, while the rest of the world continues to move forward. When we lapsed in 2015, there were 85 export credit agencies around the world. Today, 2 years later, there are 96. The world is not standing still in terms of export finance, and we can't expect it to. So what should the U.S. response be to these challenges? Well, I think that's very clear, and we can talk more about the details of this in the Q&A if you're interested. But first and foremost, we need to restore U.S. EXIM Bank to full functionality. And that needs to be done in 2 ways. First of all, President Trump needs to nominate a full slate of 5 board members for the board of directors, and the Senate needs to confirm those 5 board members so that the board of directors regains its quorum and EXIM Bank can get back into the job that it was meant to do of approving large transactions for U.S. exporters. And secondly, we need to return to long-term reauthorizations. In September of 2019, when our congressional authority expires again, we need to return to long-term reauthorizations, that is, say, 5 years at a time rather than 1 or 2 or 3 years, in order to be able to demonstrate to the exporting community that we are a reliable partner and that we will be there for them for the long term. But it's not enough for us to come back the way we were in 2015. As I mentioned a minute ago, the export credit agency world has moved on in the 2 years we've been out of action. So we have to come back better and bolder than we were in 2015. And we're working on that internally, but we need to expand our capabilities to match and defend against what the other ECAs have started doing. We're working on our programs to be able to do that, but we need a board of directors to approve those changes in our policies and procedures that that will be necessary for us to do that. And secondly, as I said a minute ago on reauthorizations, we need to restore the trust of the U.S. exporting community that we will be there for the long run. So that's my presentation. Just a brief update in terms of what I said. The first thing I said we needed to do in terms of getting US EXIM back to full functionality. Back in mid-April, President Trump articulated his, what I would call, full-throated support for the mission of US EXIM Bank, which I was very pleased to see. I think, for me personally, it was not a surprise, because I think what EXIM Bank does in terms of promoting US exports and supporting US jobs is quite squarely in President Trump's sweet spot. But nevertheless, it was a good thing to have him clarify that and articulate that publicly. In the meantime, two names have been sent to the Senate Banking Committee for confirmation, but I can confirm to you today that there are 3 other people in consideration in processing now as well for a full slate of 5 board members. I would expect and hope, anyway, that all 5 of those names, the 2 that are there now plus the 3 additional, will be before the Senate Banking Committee by the end of this month. That is prior to the August recess of Congress. And I would hope that, that the Senate Banking Committee will schedule a hearing as soon as possible in September in order to consider those and send a recommendation to the floor of the Senate. Senator Crapo, who is the chair of the Senate Banking Committee, has said publicly that he will not delay scheduling a hearing and taking that vote and sending the recommendations to the Senate floor. So I'm very hopeful that by late September, early October, something like that, I would hope that we would have a fully functioning board and EXIM Bank would be back up to doing its full job and doing what it does best, which is supporting US exporters. So with that, I guess we'll go into Q&A. So thank you very much.
Chairman Hall, thanks so much for that extremely enlightening report and presentation. I'm Scott Kennedy. I'm Deputy Director of the Freeman Chair in China Studies here at CSIS, and we're delighted to be collaborating with Matt Goodman and the Simon Chair on this program. And I know that we don't have a lot of time left, which is why I've got my watch out here, not because I'm looking at the loan situation of the bank or anything like that. I just want to make sure that we're doing what we're supposed to. But and we've got a great audience for a rainy day and a focus on this issue. But I wanted to start with 2 questions myself and then throw it open to the audience. The first one is a general question about not just the prospects of the bank, which you alluded to at the very end of your remarks, but what would a fully operational US EXIM Bank look like? What would its activity level look like? Your data showed China at about $575 billion in 2015. I think at the peak, the US EXIM was around 1/20th of that, or 1/10th of that. China's exports overall are double US exports now so their EXIM Bank is much more relevant for their exports. Are you trying to get the US back, much back to where it was in overall spending, or far more than that? Are there certain areas, since export financing includes a variety of different things from insurance to concessional loans, is there a certain type of mix that you think would be most effective for the bank going forward?
Well, I should start out by saying I don't think that US EXIM will ever get to those levels of financing support that the 3 Chinese agencies are involved in. One of the questions we've had over the years, of course, is what the sort of stable state level of activity for US EXIM would be. We got up to $35 billion during toward the tail end of the financial crisis, after the private sector financial system had contracted dramatically. But I we have to admit that the U.S. financial system and other parts of the world are a lot better developed and more robust than they are in China. I would never expect that US EXIM Bank would have to get involved in international export finance to the same extent. But I would say that I think probably over the long run, a stable state for US EXIM Bank would be in the $15 to $20 billion a year range for that leveling the playing field and filling gaps role that we have defined for the bank. That's not to say that in future financial crises that EXIM's involvement wouldn't go up as well, back up perhaps to the $35, $40 billion level. But long run, I think I'm looking at 15, 20 billion, something like that.
All right. Super. Let me ask one more question about China's approach. And you put up these very large numbers, and not just large numbers, but the change in a very short amount of time. And as someone who works on China, travels there, who looks at China's role in the global economy, Matt's program does as well. We have this Reconnecting Asia program here that is looking at infrastructure projects and approaches across the region. The last time I was in a conference in China in April that focused on China's Belt and Road, I've heard a lot more anxiety from Chinese about this than I had before. Typically, China's sort of in an advertising mode on the Belt and Road, but we were hearing more and more realism, and the worry is, there's worries just not only, there's worries, I guess, on two sides. One is China's going to loan and invest a lot of money that won't generate returns. The other is that the countries that participate and receive loans or investment will end up with a lot of debt. Mm-hmm. And this won't work out. And so I was just curious, sort of your handicapping of China's approach, not to point to the strengths and weaknesses, and to say, is there, should we be comfortable with the tale of the two cities and the way that we're doing things? Or is there things that China is doing besides scale that we ought to be, learn from?
Well, I think certainly in the world there's plenty of room for different approaches to resolving the same issues. I think it's clear, though, that in recent years China has been thinking big. The One Belt, One Road initiative is a big program. It's a very ambitious and energetic program, which I think in general serves countries very well to engage in those kinds of projects. I would argue that the U.S. should be more aggressive in its export finance for the benefit of U.S. exporters. I don't necessarily think that the U.S. needs to come up with its own One Belt, One Road type program in order to do that. But I think there is ample room, in fact, necessity for the U.S. to resume a much more aggressive stance in terms of official export finance.
Terrific. That's super helpful. Okay. The audience has been super patient. I'm sure there's plenty of questions. So if you have a question, please raise your hand. Someone with a microphone will come to you. Use the mic. Please identify yourself. Keep your question to a question. And we've got about 11 or 12 minutes left. Maybe a few more minutes since we have such a large crowd here. We've got in the second row up here on the right.
Brett Fortnum with Inside U.S. Trade. Scott Garrett, who's been nominated for the EXIM Chairman spot, has been a vocal critic and was one of the proponents of the 2015 bank shutdown. What impact do you think that type of critic in the leadership role that you're currently serving in will have on the bank, and do you think that will be conducive to kind of the future that you've described for it?
Well, I'd say that, of course, the key point here is that Mr. Garrett, former Representative Garrett, has been nominated by President Trump, who has made it clear that he wants to see US EXIM Bank not only restored to full functionality, but in fact increased in its ability to or enhanced in its ability to support U.S. exporters. So I would anticipate that any person, whether it's Mr. Garrett or anyone else who is nominated and eventually confirmed to the chairmanship at EXIM Bank, would follow the policy of the President of the United States who nominated him. And I would expect that Mr. Garrett would follow those policies in the direction of increasing EXIM Bank's abilities to support U.S. exporters rather than decreasing it.
Let me just do a two-finger on the good question. So assuming we've got a full leadership in the fall as you hope for, is there a line out the door for the EXIM Bank, or a lot of applications in the inbox that would, a new chairman and board of directors would then be able to go through?
Well, yes, we have currently the pipeline, if you will, of applications we have and have been working on extends to about $30 billion, about half of which is in a state right now that would be ready to be dealt with by the board of directors. So I would anticipate that once we have a fully functioning board, within 3 months or so, we will have dealt with approximately $15 billion in authorizations. The other 15 in the pipeline are large projects that are much earlier in the stage of development, so they won't be ready to go to the board for a while. What we don't know, though, is how much pent-up demand there is out there that has not evidenced itself in the form of applications to the bank. We know anecdotally that there is some of that, but we don't know whether it'll be a tidal wave or a trickle. We will have to see when the time comes. But as I said, though, that we don't intend to just go back to doing business the way we were doing it in 2015. We're going to come back with enhanced programs, streamlined programs that are easier and more attractive for U.S. exporters to use. And so the picture will develop when we're back up and running.
Okay, thank you. All right, more questions? Yes, right here on this right side.
Hi, my name is Henry Tugendhat. I'm a PhD student from Johns Hopkins SAIS around the corner. Thank you for the talk. So my PhD is working on China Africa, and I was wondering if you could speak specifically about the US EXIM Bank's operations in Africa. And I'm particularly interested if you have anything that approaches perhaps a proactive strategy towards Africa, given how I imagine it must be one of the most contested areas for what you're working on.
Yes. Yes, well, we do have a proactive strategy for that. We have actually Congress inserted into our mandate a number of years ago, into our charter, a mandate to provide export financing specifically aimed at Sub-Saharan Africa. And we normally have a Sub-Saharan Africa advisory committee in place to advise us on how best to do that. That advisory committee is not present at the moment because it needs to be authorized by the board of directors, and we don't have a board of directors that's functioning. But we will reconstitute the Sub-Saharan Africa Advisory Committee once we're back up and running. We have a team of people at the bank who are focused specifically on Sub-Saharan Africa and spend a lot of time in conjunction with the Foreign Commercial Service at our embassies out there, identifying export opportunities and seeing how we can address that demand for U.S. goods and services. So it's definitely, Africa is definitely on our radar screen as a well-developed area of interest.
Okay, all right. More questions? We're going to come right up in front. Give our co-host a crack.
Planted a real question. You said that China has not shown much interest in, or any interest in joining the OECD arrangement. Do you think there's some creative way that the international community, the U.S. included, could persuade China to participate in some sort of new arrangement, either by inviting it to be a full member of the OECD and pulling it into the arrangement, or setting up some new international arrangement, perhaps under the G20 or something? How would you go about trying to put that, self-constraint, as it were, on China?
Well, I should preface my response by saying that I am in no way a China expert. So, my area of involvement has been in export credits rather than China per se, but certainly as an observer of China's behavior and their demonstrated interest in the IWG that we've been involved in for a few years. It strikes me that, yes, we probably could create a new environment and some kind of new venue in which to bring them into engagement with the rest of what is now the OECD countries. But they've made it pretty clear that they're not interested in subscribing to a system that has too many rules and regulations in it. They want to remain relatively unconstrained in their ability to use these tools for the benefit of their national interest and Chinese manufacturers and service providers. So I don't see that, in my view, there's much prospect for replicating what has been the OECD arrangement in another format and then bringing the Chinese in. I don't think it's the OECD per se that is their reluctance. I think it's just the thought of subscribing to a set of prescriptive rules that will limit their range of action that they find not in their interest.
Other questions? All right, while you guys are thinking, I'm going to ask another one about AIB, another controversial bank that in 2015 had an interesting year, the year it was created. What's your analysis of AIB as a multilateral development institution and how its prospects for interacting with national ECAs, including perhaps US EXIM or others who even aren't part of AIB, because AIB is suggested that you don't have to be a member of AIB to participate in AIB financing. And Jin Chun, the chairman, has come and tried to say that they are subscribing to norms of the international community. Their loans are co-financed, and so they're hiring lots of employees from MDAs. How would you view them?
Well, it's interesting. Clearly, the Asia Infrastructure Investment Bank is a very interesting development. Because of the recent timing of its establishment, though, we, to my knowledge, have not actually had any applications that have come in from US exporters to us to support exports to AIIB projects. Once we do, and of course, as you said, their existence has coincided with that period of time when we have not been up and running. I presume that once we do get back up to fully functioning status, that we will start getting some applications coming in from US exporters that are connected with AIIB projects, and it'll be very interesting to see how that develops. But I'm afraid, at the risk of disappointing you on a definitive answer, I don't really have much of a fact base with regard to EXIM Bank's operations to apply to that.
Sure. So, well, hopefully there'll be a chance to test that hypothesis and see where it goes. Last opportunity for final questions. We're just about at 10:30, but we have here in the fourth row, the third in. Yes. Yes.
Yes. Hi, thank you so much for being with us today. I'm Linda, and I'm representing the U.S. Trade and Development Agency. And so the goal of our agency is also to promote U.S. exports, and we're identifying U.S. export opportunities in the Belt and Road Initiative. So could you talk a little bit about the EXIM Bank's role that it could play once it's up and functioning again in supporting U.S. businesses and trying to export to these countries that are financed by OBOR? Thank you.
Sure, thanks. Well, unlike some other ECAs, US EXIM does not have an overseas presence. We don't have overseas offices. We rely very closely, very heavily on the Foreign Commercial Service, which is part of the US Department of Commerce. So all of the embassies in those regions that are involved in One Belt, One Road have commercial officers posted out there, and we are in very close contact with them to uncover the kinds of opportunities that we think would be interesting to U.S. exporters. Again, we'll see when we're back up in a position to deal with applications more completely, whether some of those applications start coming in. Again, though, I think the early stage of these things. I know that some One Belt, One Road projects are fairly far along, but there will be more coming, I think, that will be more likely to involve a broader base of exporter involvement, and we'll probably get more involved in that at that point. We don't have a specific program that's aimed at One Belt, One Road opportunities, but I'm sure the Foreign Commercial Service is alive to those opportunities.
Well, I want to thank you for coming today. And I want to reiterate and emphasize for CSIS how important this is. Matt and his program have emphasized the significance of economic statecraft for U.S. foreign policy, which applies to promoting exports, investment, and setting norms as well, which is important for our economy. It's important for global growth that's inclusive, a big topic of the G20. We think US EXIM is one of those important tools in our tool belt. And so we appreciate you coming today and sharing the story of the bank and where you're going and the global context in which things are evolving. I want to thank the Simon Chair and their team, our team and the Freeman Chair as well. Everyone please join me in thanking Chairman Hall.
Thank you very much. Thank you.